Good morning, CAPIVI Vision subscribers. It is Sunday morning. I'm having a little bit of coffee. Thought I'd shoot my video. I did a lot of analysis yesterday. I've been chatting about that in the Discord. If you're not in the Discord and you want to be, that's the private channel, the VIP booth. You have to comment on one of these posts on YouTube under the community tab. Just type your Discord username and then I'll give you access to that channel. Now, without any further ado, I just want to hop right into the charts. I am excited to be making like an actual proper video. It's been a while since I've done this. Thank you for bearing with me and I really do appreciate your support. So let's look at some charts. I have SPX pulled up first. This is my current theory about where we are in this expanded flat pattern, that we've completed this 5-wave motive wave and we're now seeing a bounce, and this bounce I'm calling the everything rally. As you can see, the everything rally has been following my expectations almost perfectly, except that we didn't get a retracement back down to that 4,000 level. And how important is it that we missed that level? I think it's a big cue to see the price just continue to move. It could be really bullish or it could actually be bearish. I'm going to be looking for a signal next week. Next week is going to be a big deal in terms of overall price action. You know, sometimes I say, you know, the next day or the next week is going to drive the price for the next month. And I think we're at one of those moments. So let me break down what I'm looking at. So we do have the everything rally here shown in green. I'm going to go ahead and just delete these lines because they're just cluttering up my chart a little bit. I mean, I think everybody understands I'm looking for the price to come back to the upper trend line of this megaphone. It's a reverse triangle or it's a megaphone in Bukowski chart pattern speak. So let's go ahead and delete this. I'm going to try to do my best as well to make this audio only listenable. Does that make sense? So that you can just you won't even have to look at the charts. That's the goal here, is so that you won't even have to look at the charts. So I currently have the recent price action this year fitting between two trend lines that are expanding away from each other, and the price is just bouncing between those two levels, and currently the price is in the middle of that pattern and is currently heading upwards. Since the price found that low near 3,600, I think that we've begun a 335 pattern inside of a bigger 335. Does that make sense? It's possible that what we're actually about to see, though, is a trend reversal and for a complete bearish decline back down to maybe 3460. But the trend hasn't changed yet. So here we go. I'm zooming in just over the last few weeks since June 17th, I think we've seen a push higher for the last half of June and then some flat grindy action until about mid-July. So we had about a month there of grindy up, down, and since then we've broken out up and higher and have been continuing to find new local highs through mid-August now. And there does appear to be this really nice half-staff formation. Christian was asking about half-staff formations the other day, and I think he was looking at one of the meme stocks, and I said, actually, I think you're going to find a nice half-staff formation in SPX. And sure enough, we did see that half-staff formation break out to the upside. It started on July 29th, and we had that bullish breakout with a gap on August 10th. And I suppose that this gap could actually be an exhaustion gap because the following day, the price did gap up and then found a new high but closed red. And we actually had almost this dark cloud cover candle, almost these bearish meeting lines. But we didn't see that actualized because on Friday, we had a big green candle and it actually has a Marubozu end. That is to say that the price closed at the high of the day. It typically is an indication that the price wants to move higher. I wouldn't be surprised though if after pre-market on Monday that we actually do get some sort of reversal, maybe a little wick on something, and we could see the price come back down. And there are reasons for that. Now, this is a half-staff formation. I think it's really important to acknowledge that because the price could push up really high. I have magnets turned on right now, so my lines are going to be really on point. So I can drop this down here. And what I did there is I just measured from the low at 714, which began this rally higher, and I measured to the height of that flagpole for the half-staff formation between July 29th and August 10th. And then I applied that height to the end of the flag, and let's see, that would lead us up to 4,500. So that could be we could be in a very powerful rally right now. And if that's the case, then that's fantastic. Like, I'm happy about that. I really am. That's good. I don't know though if we're gonna get there. I don't know if we're gonna get there. My target is 430, and on Friday we closed at, let's see here. What was our close on Friday? Open, high, low, close. 42.80. So I can see another 20-point rise, and then my target's reached, and then anything above there, I'm nervous. Because that's the target, and topping patterns typically occur above levels of support and resistance, or above or below trend lines, or above or below technical levels. And so this technical level could mark that line in the sand. The most bearish thing would be for the price to rise up to 430 and then reverse right away. It could, though, continue up to 4,500, which is 200 points rise still. And so you can see that it may be premature to be flipping bearish, but I actually am going to flip bearish here. I am going to flip bearish. This chart does look really good, but I'm now wary that this rally could be about to collapse, and I'm going to go into why that is. I think that we do have some economic data coming out. I think it's retail numbers, retail sale numbers, and FOMC meeting notes. It's also getting really hot out there geopolitically. I'm not excited about what I see happening around Taiwan. I've been watching that for a while now. When Biden pulled out the troops from Afghanistan, I was actually surprised that the next geopolitical world conflict was in the Ukraine. I suspected that it was going to be in Taiwan, and that was why we had pulled our troops out of Afghanistan, was so that we'd be able to focus our efforts in supporting Taiwan against Chinese invasion. But it turns out that's happening now after Russia has already been draining our ability to withstand or to support military action. Think of all the money we've been sending that way, right? So these lines in the sands have been drawn with countries moving to join NATO or the European Union as fast as they can as Russia continues its absolute invasion of the Ukraine. And meanwhile, China has not only been arming up to invade the Taiwan for years, they are now doing military drills over that space. This is not good. This is very bad. I think what COVID did is it put a hiccup in the global system, the global economy, global politics. And now what we're seeing is that American influence is waning on a global scale. And that could be really bad, and that could lead to this decade-long correction cycle I've been talking about. And I think it's probable that this is going to happen, that China is going to do some stuff, and it's going to be a new arms race for the hypersonic missile. That's just all me speculating, right? That's just me speculating. And I hate to see that happen, of course, but that kind of a geopolitical crisis would fit what the charts are telling me, and that is that, yes, up for now, but in the future, things may get as bad as people think that they are now. Because things aren't as bad as people think they are. Right now, sentiment is definitely overexpressing the current state of things. And what we have now is a rising market, and perhaps sentiment is also improving, and the catch-22 is on its way. It's on its way. So here we go. Now, why am I worried about this not necessarily being all that bullish? Let's open this blank chart. So I charted this in linear scale, and this is currently in log scale. So I'm going to go ahead and zoom in, and I'm going to pull this down a little bit right there. Okay, there you go. This is a nice rising wedge, isn't it? It's possible also that it's a leading diagonal triangle, and a leading diagonal triangle actually resembles the rising wedge to a T, because you're going to have these two trend lines that are converging towards the end in an upward price trend, and you're going to have these decreasing impulse waves. That is to say that the trend is up and the pushes up are getting smaller. So the key here is to find the 5335 pattern. So it's going to show you this. Oh, I got to turn off these magnets. This is not going to work for me. Right here in this menu, chart settings, under snap drawings 2, you can turn off your magnets. So I'm just like none, apply, okay. Okay, and I like to make these nice and even right there. So you have these pushes, which actually look better in the 1 hour time frame. So I'm going to go ahead and do that. I'm going to pull up my let's see here, 1 hour, 180 days is plenty. There we go. Now I'm getting that definition. And SPX, I think it trades 24/7, doesn't it? No, SPY trade. SPX doesn't trade. But I'm going to go ahead and turn on after hours anyway. Whoops. Okay, and zooming in. So here we go. So I see this, and I'm gonna start counting. So here you're gonna have to look at the chart, but basically from 714 we have wave 1, 2, 3, 4, 5. And what's super curious is that we even have like this little wedge in here. Let me change this drawing color to yellow. Right now I'm drawing another seemingly rising wedge that starts inside of this larger rising wedge. There you go. And the price does break down from there into a clean A, B, and C correction. You see that? Now, in this particular rising wedge, you can see that this fourth wave, which starts right here, doesn't actually overlap the top of price wave 1. So I'm going to go ahead and put a little thing there. You see that? There's a gap there. But the price did correct down to that 4 wave of 4 moving higher. Why is the extent of that 4 wave so important? It's almost like the entire motive wave structure is based on it. And it makes sense because a motive wave has 5 waves, and the first 3 could resemble a corrective wave higher. And the extent of that 4 wave, or how that 4 wave forms, that is really going to tell you whether or not you're looking at a corrective wave or a motive wave. Or at least it will start to. And so it's really interesting to see that relationship there in this first wave. So again, let me put it this way. This is our first impulse wave. First impulse wave of leading diagonal. I'm just going to call it leading diagonal triangle or rising wedge. I can't tell which one it is. I can't tell which one it is. So yeah, there you go. And it looks like this needs to have a little bit of, let's just put a text arrow on here, and there you go. All right, first impulse wave, leading diagonal triangle, rising wedge. And so I have each one of these waves. They're separated by these vertical white lines you're going to see along that pattern. And that ABC correction out of that first small rising wedge actually is that second. It's actually the reactionary wave. The first reactionary wave. So 1, 2, 3, 4, 5. Moving on, you can see the price did continue to push higher, and I considered this. It was hard to say if this was a 3 wave. You can see that it could be, right? 1, 2, 3. But then I didn't know what to do with all this horizontal price action, right? Because this is that half staff flag right there. Right in there. And so that got really confusing. It's like, okay, so if this is 1, 2, 3 leading up to the top of that trend at 40, 50-ish, 40, 43, then I'm looking for 3 down, and I just don't get it. You just don't get it. You really don't. You don't get a significant low. The low we saw on 8-2 wasn't surpassed, so you can't really say that this is a 3-3 pattern. I guess it could be some sort of corrective flat. It could be 1, 2, 3, 1, 2, 3, and then 1, 2, 3. It just doesn't work. That count doesn't work for me. So I consider this to be a 5 wave, where we had that top trend line encountered twice, and that second touch of that trend line that constitutes a truncated 5th, and you can actually see that there is a corrective wave through here, just a standard flat ABC. So I think this is the best way to put it, that this is 1, 2, 3, 4, 5. So that's our third impulse wave in this pattern. And then an ABC correction, which really was like, I don't know, it's like, can you really call this an ABC correction? You have rejection of the top of the trend line, and then you have this low on 8.4 to the next high on 8.4, which was near the intraday high, and then the price gapped lower on the open of 8.5, and I'm calling that a corrective wave. It's kind of a stretch. I wonder if we can even see that on the 1 day. I wonder if we're close enough. Let's see here. Yeah, right here. Like, is that really a corrective wave? And I guess it could be, because you can see that we definitely do have a triangle through here, right? Maybe it's a pennant. Maybe it looks like a rising or ascending triangle. But there you go. So that is a corrective pattern, I believe. And so we can just leave it at that and go back into our hour time frame and move on. And that's what's really confusing, is this is our fourth impulse wave. This is the wave that's supposed to overlap 1. So ideally, this would have gone down to here. Do you see how the bottom of that trend line at that point in time, or the bottom trend line of that pattern in that point in time, is right there at the high of that first impulse wave? So this is what we should have seen. And then the next motive wave would have started down here, right? Do you see how I'm connecting those lines now? Like, ideally, this is what it would have looked like in a leading diagonal triangle. And that would have brought the RSI back down and the implied volatility back down. And then the implied volatility could have started to rise maybe as the price continued to rise as well. But instead, the price remained elevated, and the RSI became more anchored to the upper half of the oscillator, and implied volatility didn't budge. And so what we get is a continuation of higher rises in the price, and the RSI reaching highs, and then it's kind of stalling now. And now the RSI doesn't lead the price, but it is a good indication that there could very well possibly be a little bearish reversal upcoming. And it would just be correction, right? So you see this rise in the price here between 811 and 812, and on the 1 minute RSI, it's flat. It's very flat. And it looks like that there might even be a swing failure pattern forming here, where we're going to get this, it's probably something like this, where the RSI comes down from 76, pushes down below 50, bounces up towards 50, and then continues lower. And we're going to get this nice W shape. And that would be a very bearish thing, I think. The price would probably spill downward, and it would probably resemble more or less a sideways grind for a week. That's very possible. And then from here, we're going to be looking for some sort of bottom pattern if the price is going to continue, or the index is going to continue higher. So that would be, this is very possible, and this is actually what I want to see. I want to see a nice corrective down A, B, C correction, and I want that to happen next week. And I think that the data we have coming out could very well cause that, and this would be a very healthy retracement. It would catch a lot of bulls up here, right? Because it's like, oh, look at this, we've got this bullish breakout at the very tip of this pattern. But this breakout, I mean, it's been rejected once, and it is good to see that close, but I don't think that we see the momentum needed to really trust that breakout yet. Like, yes, implied volatility is coming up just a little bit, but to me, this thing is due for correction. And then this rising wedge would become a one wave in a new motive wave, possibly a new motive wave. I don't think, though, that what we're going to get is going to be a full 5-wave motive wave, because in a zigzag, I'm just going to do a little drawing here. Okay, you've got 3 waves, and the first wave up, this is a motive wave. The second wave is a corrective wave, and the third wave is also a motive wave. So I think what this leading diagonal triangle is just that first leg A of an ABC move higher. And so what I'm looking for is actually now a measured move up. I'm looking for a measured move up, but the measured move up includes a corrective phase. I think that's where we are. And I think that corrective phase is going to wreck the meme stocks. All the momentum that AMC had, it's been born inside of this rising wedge. And that's something I said before, that in the everything rally, that these meme stocks would also go crazy. And they did. And AMC, to me, has appeared to fail to break through that downtrend from the all-time high. And so now we're at a corrective phase in the everything rally. And guess what? I think that corrective phase is going to take all the momentum out of the meme stocks. And we're going to see this big, big, big retrace. And then it's going to be that third wave in the everything rally. That's where I think MOAS would happen, if it is going to happen. So I'm currently out of GameStop and AMC. When we get to the end of this corrective phase in the everything rally, and the prices of GameStop and AMC are very low, or find their new low, then I'll probably spend a little bit of money and speculate. Okay, at that point in time, I'll speculate a little bit, but for the time being, I'm just out. Okay, so there you go. Rising wedge or leading diagonal triangle, it doesn't matter. I think that retracement is incoming on the index, in the markets in general. And so what I'm looking for is for the meme stocks to continue moving lower. And I think that stocks individually and sectors are going to be mixed. I think that the news that we're having this week coming out is going to be very influential in trading. And there is this really bearish geopolitical risk hanging over us all the time that could interrupt this entire rally at any moment without warning, which I hate because I can't forecast that. That's not something I can forecast. So There's a risk. There's risk here. A lot of risk. Okay, moving on. Gold futures are looking fantastic, and this is another reason to be bearish because the flight to gold is starting to occur, and you can see open interest here is decreasing, right? You see that how it's stepping down on these highs as the price of gold future contracts decreases. And well, I guess yeah. I'm looking at gold futures. Is this the spot price future we're speculating on? I think it is. Well, at any rate, here you're going to see a pretty healthy motive wave. 1, 2, 3, 4, and then maybe 5 is extending. And when 5 extends, you get a pretty dramatic pullback. So I'm hoping that this pushes higher and then comes down and tests this upper trend line of that channel before making a 3 wave, which hopefully subdivides and just starts this powerful rally. And coming up to at least 2060 before finding resistance, major resistance. There is, of course, going to be a little bit of push right here at 1980. You can see, oh, I pretty much just like instinctively drew that. Oh, wow, look at that. Look at that. Don't you love it when you draw lines and then they just like make sense? So, you know, this is kind of what I'm expecting gold to do. Yeah, there's going to be some downside here. And yes, perhaps I'm holding red for a little bit. But when we reach up here, I'll be towards 1920. I'll be taking some profits naturally. So I am curious to see where gold futures go. What I really want to talk about today too is dollar strength. Dollar strength is something that I have been keenly aware of since 2008 because that's when I started trading. I started with silver and gold physical, and so I've been in the game, so to speak, for a very long time. So let's just look at this max chart I have on TD Ameritrade. The dollar strength starts in 2000 and crashes. The dot-com bubble. Interesting, right? The peak of the dollar here was actually at the peak of the market. And then this is a huge zigzag. Like, how many waves do we have through here? Like 1, 2, 3, 4, 5, 6, 7. Maybe even this is actually, so 8 and 9, giving us a motive wave. I think 9 waves is motive. Is that true? You have 5 waves and then 1 extends. It should be 9. Yeah, right? Okay. Anyway, so big zigzag there. Corrective bounce higher. And then skadoosh. Like, let's actually measure this. How far did that retrace? Look at that. Okay, this is beautiful. This might be hard to see though. So I'm going to drop an arrow down. That's the very, very tippy top. You can see there's a wick that touches this perfectly. And what level is that at? That's at 70%. Now, Bulkowski says in corrective measured moves up or down that you need the price to retrace to at least that 70% mark. And boom, there you go. So that's the perfect demonstration of it. Let's actually go back over to SPX and let's see what that looks like. Oh, yeah. Also, look at this big chart. Look at this big chart. Imagine that we're in a broadening pattern, right? And this low is the start and the next low is coming in. Like, oh my god, this could be crazy. Like, if we do enter this massive bear market from this big zigzag, like, could we drop this low? Yeah, we could. We could. I don't think we will though. I think we'll form a partial decline through here. But okay, the monthly chart is looking wicked, isn't it? Like, I mean, everyone's looking at this, right? Everyone's looking at this and saying, oh yeah, nice, it's time to go. But I'm like, I don't think so. I think that we just hit our first zigzag through here, right? That's a motive wave. This will be a corrective wave, however high it goes. And then we'll probably be looking for that. That move down to 3,200. Like, at least. Like, I really don't think we're done with this at all. Not nearly. And so I just had to cover the monthly chart there. But what I really want to do is I want to zoom back into the 1 hour chart and go back to my wedge. And I need to clean this up probably a little bit because now it's looking sloppy. So sloppy. Let's see, what's my time at? 24 minutes. I mean, that's okay. I'm gonna spend a lot of time editing this and processing because I have to first encode the videos and then I have to edit them and then I have to export the files. So it's gonna take like 2 hours to just run this thing and then I have to spend the time editing it and then, well, I probably won't watch it. It's too long. It's too long. I'll be sitting here all day making this video if I do that. So I don't want to do that either. Now let's measure this wedge. Now, where do I want to start the retracement? Do I want to start at the low at 36 or start at the beginning of the pattern? And I'm going to choose at the beginning of the pattern. You can see my RSI there doing a double bottom. That's a swing failure pattern. And that is a good spot to start. The RSI is a fantastic way to indicate where the wave or pattern you're following should begin or stop. And that's also what helped guide me find the motive waves. I also want to point out that implied volatility has been falling since the beginning of this 335 pattern, and we're now at the top of that 335 pattern. Implied volatility is at a point where it should start ticking back up, and it is. And I think that we're going to see the price drop and implied volatility increase. There's just a lot of reasons. I think if you look at the MACD, there's divergence there. If you look at stochastics, it's like, okay, the thing's been overbought for a while. I haven't turned on Obi-Wan's sell signal, the Mewtwo signal, but okay, here we go. What am I doing? I'm measuring the height of this pattern. Let's go. Let's see. Really? Is that's too, oh, I drew it backwards. I always draw my fibs backwards. That's okay. Go from here at whatever this high was at 4280 down to about, what is that? 3720, and 70% is down to 4120. So can you imagine the price doing that, going down to 4120? Let's say we fall first to the bottom trend line of that wedge and bounce higher. Maybe we form a double top, I don't know. And then 4120. And then the question is, would a double top target between 4110 and 4280 produce a price target down towards 4120? And it's very possible it would. That's very speculative, but yes, this would be good. This would give us a nice little ABC. Who knows how long it takes, right? The longer it takes, the better. The cleaner it is, the more effective it will be at cooling off the markets and shaking out weak hands. That's the way the markets work. And then we'll see the everything rally continue, barring some global disaster. So yeah, 4120. I think that's where a healthy market wants to go. It wants to take some profits. It wants to take some money from some reluctant bulls or some reluctant bears who finally flip bullish. Yeah, I'm not thinking that the markets are going to go up and up and up and up and up. Not when everyone thinks they are. Once everyone realizes that, oh look, we're in an uptrend, it's like, okay, it's time to get wrecked. Okay, so that was SPX Gold Futures. Let's look at Bitcoin. I haven't looked at Bitcoin in a long time. Let's turn this on to the weekly chart. I like the weekly chart the most here. I think that we're moving through, let's see here, a nice zigzag, right? We had a motive wave pushing down, corrective bounce higher, and a motive wave ending towards that 1800 level, which is fantastic. At that time, I was saying, 1500 would be a good spot to fall to, but seeing the price turn around before then is bullish. I really like that. The RSI is telling me that, perhaps it's time to move all the way back up and quickly to overbought, which I like. We did have a big selling climax bar here on the week of June 13th. Implied volatility is falling. Yeah, this looks good, and I can almost see an inverted head and shoulder pattern on the RSI. I'm thinking that Bitcoin wants to go higher. And I think the role of Bitcoin is going to be very interesting. It's been correlating with the equities markets, obviously. So I am watching for what may occur here. I do hope that it breaks away from that. Of course, we have the same warning here as we did on SPY. It's that we could have a rising wedge. You can see there's a similar 3-3-5 pattern through here. 1, 2, 3, and then 1, 2, 3, 4, 5. Interesting. This one will be flipped upside down though, because the first 3 I think is down, and then 1, 2, and 3, and then boom, down. So curious. This looks more like a rounding bottom, perhaps, with a heave right in the middle. I know that tech stocks are doing this. Amazon has a similar pattern. GameStop has a similar pattern. So the tech sector, I think, is more or less correlating here. I don't like that. I like to see things trading in their own way, in their own right. So I'm looking for any gaps right now that haven't filled as we go up the price. And it's looking pretty good. No gaps, no gaps to fill from the bottom is fantastic. That means that there's a likelihood we won't be going back down there. Or there's at least a likelihood, the likelihood that we will likely go down there is absent, which isn't necessarily that likely that we're going to go higher. It just means that we aren't as certain to fall. Is that weird? Does that make any sense? Okay, so let's look at this. We got 1, 2, 3, 4, 5, 1, 2. Is this, oof, we're going to have to get in here. We're going to have to get in on the 1 hour. And we're going to have to get in with the after hours to really break down what's happening in Bitcoin. So let's do it. Okay. I don't think Bitcoin trades after hours, not the futures. Well, no, they should. Okay. So I'm looking for 3 waves or 5 waves. I'm really looking for whether or not this is a bearish or a bullish pattern. I can see right away I need to clean up these trend lines just a little bit. So we're going to zoom out. And we're going to start at the highest high. And I like to draw these as if I was watching them happen in real time, not retroactively. So you would connect those 2 peaks, right? You know, this first peak here and then this second peak here. And when I do that, I'm probably going to cut out that wick. But if I do that, you see what happens. Actually, that's not bad, is it? An ascending triangle? That might not be a bad way to analyze the price. But I'm not going to do that. I'm going to take the very top of that wick. And sure enough, we have a touch point here once again. So we have 3 touches on the top. One there, and one there. And the question is whether or not those occur after the price has reached the lower trend line. And if we draw the trend line from that low at 1880 and go up to the next low, that looks pretty good too, doesn't it? Yeah. It's got kind of a weird, it's kind of weird looking. Isn't it weird looking? Jeez, let's pull this back. Does that help? That helps. Okay. Interesting slope on that. It's not very pronounced, is it? And do we have motive waves or do we have corrective waves? I think maybe that 2280 level marks the top of a motive wave, and then we have a 3-wave push higher, and then maybe we have 1, 2, 3, 4, 5. See that? That's probably the second leg of 1, 2, 3. Oh no! When you start charting these 3 waves through here, this is an indication that the price is probably actually bearish. No. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Do you see what I'm doing here? 1, 2, 3. Doesn't even reach the top of the pattern. And then what's going on? What's this up here? I don't know what this is. This isn't great. What? The count just broke down, right? 1, 2, 3. It could be a bigger like an expanding flat. You know, sometimes 3 waves are hard to read because they aren't very clear. Like this could be 1, 2, 3. So this is looking bearish. This is looking more like ending diagonal triangle. I wonder where it's happening in its position relative to the motive wave that we just had, because that's important too. And it's happening at the end of a motive wave, 4, 5. Oh shoot, it's happening at wave 5. Oh man. After wave 5. 1, 2, 3, 4. 1, 2, 3, 4, 5. And then boom, this thing. Jeez. Is that not good? The RSI, at least on the daily time frame, is really failing to get above 60. Volume is dropping. Implied volatility is low. Ooh. Could we really be in for another leg? 1, 2, 3. This could be a wave 4? What was the second wave's corrective form? Because typically you go from expanding to contracting. So let's just have a look here. Let's just okay. Is that expanding? Is that contracting? Is that nothing? Is it's hard to like I want to make it into an expanding pattern, right? Like that's what I want to do, because I want it to be backwards, and because hey, we had an overthrow here, double top. Okay, maybe a double top over here above this upper trend line, make this an ascending broadening wedge, and the price breaks down from there. That would make sense. Okay, and then we could have this contracting corrective wave at the end of wave 5 here. And if, oh my god, you're kidding. If this is a zigzag that isn't complete and we go down more, we could be in a complex zigzag. Double zigzag would bring the price even lower. It's possible Bitcoin's targeting this trend line. No. Don't say it's so. No, but it could. Imagine if SPX breaks down, the tech sector breaks down alongside with it, and then Bitcoin follows. Ugh. That would be so bad. I'd be so upset with that. That would not be great. But let's go back to the dollar strength, because that's what I was talking about. I forgot. So I'm like, you know, SPX could drop. Oh, and look what dollar strength is doing. Dollar strength looks like it could drop too, right? We're in this ascending broadening wedge. And it looks like the price is starting to break down, right? So we're looking for a 3-wave trend reversal here. So we're looking for a new low for the DXY to fall below 104 to really set that new downtrend. I think it's possible that, we're looking at a new motive wave birthing itself. 1, 2, and wave 3 is starting. 1 of 3, 2 of 3, 3 of 3, and then the dollar would drop. And what would that mean for markets? Well, it's hard to say. Everyone keeps saying that there's a correlation between the dollar and the stock market, the indices, but I don't know. The markets have been in an uptrend for a long time, since 2008, with dollar strength, right? And then you see dollar strength kind of explode at the beginning of this year as the markets decline. So overall, the greater trend is up and the stock market is up. And then in the short term, you have the dollar's up and the stock market's down. So there could be a divergence there. It's difficult for me to know. But to me, I do believe that the dollar is ready to break down again, start heading lower. It's reaching into overbought in the RSI quite a bit. That's not a sign of reversal. That just means that I think we've come to the top of some motive waves, possibly. So I'm looking for the dollar to drop. And would that correlate positively or negatively with the stock market? That's the question. I just don't know. I'll have to study that. I'll have to study it. Let's go to crude for a moment. Go to crude oil. So I've been expecting crude to drop a little bit for a while. And it looks like that's what it's been doing. And I still haven't calculated that double top price target yet. Maybe I'll do that this week. Maybe I did it in the Discord already. But it's very possible that we saw a rejection from that downtrend and the price of crude oil will continue to drop. But that wouldn't make sense with a dropping dollar, would it? But maybe it's not the dollar that's driving the price of crude. Possible, right? I just saw some news about leasing oil rights in the States were being revoked, which would effectively reduce supply. So I don't know. Very curious, though, to see this. It does look like this could be a bottom, right? There could be a bottom in there, in which case we're going to see oil start to bounce. It's possible that we started this this double top, and if it busts, I mean, then the price of oil is going to soar, and that would make sense with the dollar dropping and the stock market dropping. Do you see where I'm going with this? It just looks like there's a lot of things that could all line up. Like the stars could align in the most bearish way possible, in the worst way possible. Everything could line up, which is why I'm so nervous, because everything looks like it's going along just great. It's like, oh, look, the markets are up. Yay! Gas prices are coming down. But, sticky inflation is still, high, and inflation is still high. We really haven't seen an appreciable drop yet in CPI. Congress just passed another $700 billion bill, right? Which is great, supposedly. I think it's good. I think the Democrats are politicizing, of course. It's all politicking right now. All politicking for the next presidential election in 2 years. Midterms are now. So vote. Be sure to vote. I don't care what you think. It's your civil duty. So this looks like pipe tops here on the daily, which is nice, which means crude could continue down lower. And that's really what I want to see, is I want to see this move down. But you never know. On the daily time frame, Bulkowski's tweezers actually indicate that this is kind of random. It's not as toppy as it looks, but I always call pipe tops when I see them. So I'm going to call pipe tops, and maybe we're looking for a double bottom in the price of crude before we see a push higher through that downtrend and move higher. So again, I am looking for the SPX to rise a little more, just a little more, and then we hit that target, and then it's reversal potential at any time for that corrective phase, and maybe oil rebounds in that corrective phase before continuing a move down lower, because I was expecting oil to reach 70. Yeah. So maybe we go through our corrective phase, everything rally starts to finish, and then the big bear cycle starts. I'm always early, right? Things take much longer than I think they do. So I think we're on track for something like this. Yes, that would look good. That would look good for me. Okay, moving into silver. I've been talking about precious metals a lot this week. Silver is the most exciting. Most exciting because I think that we found ourselves in a little, let's see here. We're in a corrective phase right now. All right, you see that? There's a broadening pattern through here, and I think this is a partial decline. We're going to zoom in on the 1 hour chart. Clean this up a little bit. And what's exciting about this is that because wave 2, I think this is a second wave in a 5-wave motive wave structure. And so I think wave 1 is right here. I think this is a bullish motive wave. I'm not sure where it starts. I'm just going to draw it there. So 1, 2, 3. A little dip for 4. Maybe 5 dies early or truncates, whatever. It doesn't matter. 1, 2 is expanding, and that's exciting because then wave 4, the next corrective cycle in the motive wave, if it is contracting, as I say, it's in like a pennant or a triangle, then it's probably going to indicate that the last impulse wave of that motive wave, the 5th wave, is going to be powerful and strong. And so seeing a broadening second wave is really good. I'm really happy with that. I am hoping that this is a partial decline in this megaphone pattern, and then wave 3 will be pretty powerful. Wave 3 might challenge this downtrend, and then wave 4 comes down into a triangle, and wave 5 sends us much higher. And I mean much higher. I think that the precious metals are going to have a great time as the dollar drops. As the dollar drops, the stock market drops, uncertainty rises, geopolitical risk is high. Everything is lining up here for the precious metals in every way, shape, and form. I think it's the only place that you're really going to be able to put your money. I really do, to protect it. It's not. I just this next bear. I don't think the bear market's really even gotten going. Because we've got just so much, like the markets are just derivative products. They're just it's all fake. It's all fake. It's not a stock market. It's an options contract market. Now, the 10-year Treasury yield has been on a tear for a while now, and I've got that Elliott waveform analysis pulled up, and I have this posted in the Discord, obviously. And this wave 4 that we're working on has been under development for quite a while, and it looks like we're finding that third touch along this broadening pattern, this megaphone shape. Blakowski says, hey, in a broadening pattern, you get that third touch along that lower trend line. That's a good place to buy it if the price starts to rebound, as the price typically, right, moves across the entire pattern, which for here wouldn't mean necessarily dragging out this line, you know, to infinity, being like, yeah, we're going way up here, way up to 40. It's more likely that it's to the high of that pattern right here, so 34. Even that would be pretty appreciable push higher, right? You know, I can see a bottoming pattern occurring through here, right? So what that means is we'd have this rate come up a little bit and then fall and then rally. So this would be a bearish thing, right? And this is kind of what's got me, is that it's these rates. These rates go up, markets go down. And we've just recently come off of, well, not even quite oversold, RSI at 32, and then reversing. And that was a big bar too. Look at this big green bar. That was a big reversal. And we have this technical level that's slicing through here, and the price is now closed above that. To me, it looks like this chart is getting ready to go, ready for a 5th wave. And that 5th wave is probably going to be pretty big. Wait, 1, 2, oh, maybe we've just started wave 3. We've only finished the first leg of wave 3. This corrective pattern, this expanding pattern, this is a 2 wave of a 3rd wave. So we got the 3 of 3 coming up. That's a powerful wave. That's a powerful wave. The 3 of 3 can be a very powerful wave. So are interest rates going to go up? Yeah, probably a lot. Probably a lot. Probably not great for markets. Yeah, it's not good. That's not good. So bearish stars are aligning, and so that just makes me not very optimistic. So with that in mind, when we look at AMC, it's like, okay, so you're saying that right now the markets could go into retracement. Yes. And what would that mean for AMC? Well, it would mean that this is a beautiful double top, and I've gone into that a lot this week. Topping pattern right here. This one was a V back here. This one has a V, but then it also has another double top right here, a mini one. And you've got all these bulls looking at this divergence, right? It's like, do you see this? Let's see here, right? There's the close, and there's the close. See that? The close between these two peaks in the RSI. The first is lower than the second, and then the peaks in the RSI, the second is lower than the first. That's called bearish divergence, and it confirms once the RSI, or if the RSI comes below 70, it probably means the price is ready to turn around. And if the markets are going to go down, AMC is going to get dragged down with it. And we do have that decreasing volume trend. It looks like implied volatility has possibly peaked. And so if the price were to drop, it'd be retracing this run. Implied volatility would drop. Volume would continue to decrease. RSI would start to push down, and speedily so. So to me, it looks like this is not great. This is not great for AMC. Not in the short term. I mean, it's way overvalued. You've seen, if you look at the revenue and their cash flow, it's like, why aren't you trading around like $2, $5? Let's see here. GameStop appears to be kind of in a rising wedge, right? I'm a little nervous about that because That would be bearish also. We had this big wick coming in on the 8th of August. You can see the price peaked around $48 before getting pushed lower, and it's been kind of just having a tough time moving in a narrow range, probably a narrow range. It's not, there's not quite narrow range pattern, but I do suspect that this is bearish because if the market's pushed down, I really think GameStop could break down to $25. And even if it doesn't, the 335 would only give us a target of 49. Currently sitting at 40. I guess that is a pretty good appreciable rise. It's like 10% almost. But here's the thing: is that, or wait, what is that? $8, so 20%. It could still rise 20%. That's not bad. And then come up and form this divergence or its swing failure pattern on the RSI. That could happen, right? To see this occur. Like that is possible, but I wouldn't put any money on it. I really wouldn't. That'd be really annoying because if GameStop were to do that, then AMC would likely be putting in a triple top, and that'd just be so annoying to see this come up again before coming down. Like just let it die. Don't bother forming that triple divergence, please. That would just be irritating. The bulls are so annoying when the AMC runs. It's like, come on. Okay, so I think that's where I just gotta stop the video because this is getting too long. 45 minutes. Okay, you guys, this has been CAPIVI. Thank you for subscribing. Remember, always hedge your bets, be responsible, stay safe, don't invest anything you can't afford to lose, obviously, and happy trading.